and welcome to Money Matters. My name is Jim Butler with Marcum Wealth, and my co-host tonight is Mike Dever with Brandywine Asset Management. Welcome, Mike.
Hey, thanks, Jim.
We have a great show coming up, an interesting conversation as usual. But before we get there, let's chat a little bit about current events, although not too current. We'll try and make them stretch throughout the entire year as far as relevancy is concerned, which isn't really too hard. One of the interesting things in our business is there's never a shortage of excitement once you read the headlines. And any sort of headlines from mainstream media to developments of economic indicators. And certainly one that I think will continue to last most of the year are announcements from Fed action. In other words, interest rates movements that the Fed takes based on their reading of the economy. I think as we approach year end, we're likely to see a cut in interest rates, but I used inflection in my comments on purpose because we started the year with the market anticipating, and Jerome Powell probably as well, that we would have a handful, 5 or 6 interest rate cuts throughout the year. And certainly that is highly unlikely to happen. If anything, the first one might occur more into the fall based on economic indicators. So to what extent do you pay attention to that, and how does that impact your business and your clients?
Yeah, it's interesting, Jim. It doesn't really impact us in any substantial way in that our funds are model driven. They manage risk with options on the downside. If we end up in a risky environment and markets fall off, then in that environment, we'll end up with less exposure. It's just naturally how it happens. But you're definitely right on the front of the expectations. It went from 5 or 6 cuts to there might not be any. And the Fed is definitely going to err on the side of not easing because the last thing they want is to see a resurgence of inflation, have stagflation, which is a word people are starting to use again. We haven't heard that since really the 1970s. So hopefully I think they should kind of maintain things where they're at. Anecdotally, it was kind of interesting because I got out of a lunch today with a banker, and he was saying that the fact that just in the last few weeks, rates went up about 0.75% has really slowed traffic for them as far as loan activity. And it's just shocking to me, and on the residential side with housing, and that rates went from 2.5% to 6%, and that didn't have a big impact, but it goes another 3/4, and it does. Now I realize that the first part did, but why would the last 3/4 make any difference at this point? Right. But I think what we're going to see is a slowing in the economy. I think we will see some moderation of inflation now. It's just taking a lot longer for the higher rates to kind of permeate through the economy.
Yeah, and I think we can't make light of the fact that given all the cash that was and to some extent is still in the economy, meaning in investors' pockets, savings accounts, money market accounts, ready cash, that needs probably to digest a little bit more in order to really signal more of an economic slowdown. But as long as we as consumers and investors have cash, at some point we're going to continue to spend, whether that's on housing improvements, durable goods, new cars, you name it. That's that's part of the engine that keeps the economy going. And also, unemployment. Unemployment is still relatively low. That doesn't mean that folks are necessarily working in their occupation of choice or earning the level of income that they would ideally like to make. But the reality is most people who want to work can find work. And with unemployment low, that means, again, people have incomes, money to spend. The economy's moving along, not in a robust fashion, but as we know, is caused, inflation to remain somewhat stubbornly high, at least according to how the Fed would define it.
Yeah, I think, but the simplest explanation for inflation is too much money chasing too fewer goods. That's the kind of the bottom line on it. And obviously, with the COVID crisis we had, and the Fed and the government pumping trillions and trillions of dollars into the economy at the same time, there were just supply pressures like crazy, and it's hard to get products to market. You had to have inflation. Finally, we'd been pumping out a lot of money, but we hadn't had the same supply disruption we had then. So I think that's working its way through, but you still, and we're probably near the end of that money flow that we had. But as you point out, we've still got a strong economy because we've got strong employment. I think until we start seeing that fading a little bit and people getting a little bit behind the curve as far as wage increases versus inflation, I think you could still have some inflation. Right now, the wages have been keeping up for the most part. They need to, I think, trail a little bit before inflation comes down even more significantly.
Yeah, that's a good point. And one other thing real quick before we get to our question, I just read something recently, this year being an election year, and again, a headline grabber question that investors often will ask is, well, what impact will the election have this year? Because this time it's different. And I would suggest, based on history, it's different only because the candidates are different, but the results in the market are going to probably play out similar to what they have in the past. So since 1928, I did a little research on this. Since 1928, we've had, including the one in 2020, 24 elections. And in 83% of those times, the following year, the S&P 500 was positive, which means clearly the majority of time, the year following, whether it was a Democrat or a Republican that was elected to the White House, the S&P was positive. So once we get past the headlines and the election results and all the emotional chaos that results from that, the economy continues to chug along, the S&P continues to chug along, and we kind of get back to business.
Yeah, there's really not usually a lot of major regulatory changes or tax changes that are significant enough to affect the bottom line for companies, and people will continue to figure out ways to grow.
Yeah. So, Mike, our question for our viewer, and actually from one of our viewers, George Douglas in Philadelphia, is asking a pretty broad question, but it's, I think, still relevant. And it reads, what is a safe investment in today's marketplace?
So that's a great question. People ask that all the time. And the reality is there is never a safe investment. And I'll point that out. I had a large family office client of ours that years ago was saying that they wanted to be safe. They wanted to keep their money in cash, a lot of their money in cash. And they had, maybe a third or 40% was sitting in cash. And I said, well, you're taking on a lot of risk there. You've got inflation risk. And they were looking at it as, I don't want to lose the money. And I said, well, you're pretty much right now, and that was back at a time when they were getting 5 basis points or 10 basis points on their money. So you're pretty much now probably losing 1 to 3% a year on your money. It's just sort of a guarantee. That's what's happening. So you can either take that risk, which is a known risk and almost a guaranteed risk, or you can put it into stocks or put it into something else, precious metals, for example, and you're taking on the risk that they outperform or don't outperform that cash that you have it in. But that's a risk. So there is nothing that is risk-free, which is why people really preach, and financial advisors, the diversified portfolio, because in any one period of time, something's always going to do better than whatever you have in your portfolio. The more diversified you are, the more likely you are you're going to kind of get an average return that's pretty good and you don't have to worry about market timing and what's the hot stock or market or commodity or whatever this year.
So do you have a bottom line recommendation for our friend George in
No,
today's
so,
market?
so George, it's really keep it diversified in your portfolio. Depends on your financial condition. I would advise consulting with a financial advisor because they really can. A good financial advisor can really help you out with that. But depends because it depends on your situation. You know, whether you've got a strong income coming in, or whether you're in retirement and you're living off those funds that you've saved, and then the size of those funds is significant. So that all those things come into play into how you want to skew that portfolio, but you want to keep some diversification in your portfolio.
That's a good answer because it kind of highlights, Mike, that it's not an easy pigeonhole answer to say, well, here's a good investment for today.
It's
not black.
not right. You could I've had plenty of people saying they want to have some sort of a fixed rate in retirement. I can lock it in. I get my 4% a year or whatever. I'm happy with this number that's coming in. Well, you're happy with that number as long as you don't get double digit inflation sometime over that period. In which case you just got maybe over a period of a few years half the money now that you thought you were going to be getting. Same amount of money, but it's purchasing half the goods and services.
Yeah.
So you really need to be keeping that in mind. There's nothing safe because of that.
Good. Thank you, George. Hope you felt that was worthwhile. And if you have a question that you would like our panel to address, please write in and let us know about it. And this is how you do that.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Well, welcome back. Our guest today is Ben Rusk of Wisdom and Wealth. Welcome, Ben.
Thank you.
Hi, Ben.
Here. Nice to meet you.
Yeah. Good to have you on the show. And maybe starting out to kind of keep it simple and to give you a proper introduction, can you share with our group today a little bit of your background and how you serve clients?
Certainly. So I had a 32-year career in IT. And over that time, I had, invested in 401ks and just did the normal things that everybody told us to do. But at some point in time, I started to realize that I needed to get out and do something different. So in 2018, I retired myself from corporate America and struck out on my own and was looking for different ways to help people protect their wealth. I just came from a family that didn't have a lot of wealth. And so when I accrued what I had earned during my career, I wanted to protect it. I wanted to find ways to hold it so that I could, leave a legacy to future generations. One of my passions over the 30 years is being a gold prospector. So naturally, I was drawn to the metals market to see what they could do for me. And I found a very lucrative way to protect my wealth. And I now share that understanding and wisdom with my clients so that they have options to consider for diversifying their portfolio.
So when you say gold prospector, you don't mean the guy going down the street to the local stream and physically looking for gold. You mean something else, don't you?
I absolutely mean that. I lived in Montana for 5 years. I met a gentleman that took me for a ride one day, and we went down to a local stream. He peeled back a slate rock and just brushed off the dust that was on top of the rock. We went down to the stream and panned it, and there was gold in the pan. Wow. Gold is where you find it, and it's pretty much everywhere on earth. If you know how to recover it, it's pretty easy to find. When people talk about gold mines and gold-rich areas, that's where the big mother lodes are. And what a mother lode is basically It is it's a lava tube vent that was filled with liquid quartz, and gold seeds followed that liquid quartz. And when the eruption stopped, the quartz cooled and the gold was trapped inside the quartz. Now, through the course of erosion, the quartz wore away and released the gold to roll down the hill and into the streams. And that's where we find it today.
And when they're mining for gold in the big gold mines, are they just going after quartz seams then?
No, so there's two types of mining for gold. There's placer mining, which you see on TV shows like Gold Rush, where it's just, laying on top of the ground. That's the stuff that has eroded away from the mountains. Then there's hard rock mining, and that's where they're following those quartz lava tubes, and they're actually breaking up the rock to get to the quartz.
So I do have a question. You've been doing this a number of years. Is it profitable? Is it just for fun, or do you actually make money doing it?
So that's kind of the big joke, right? A miner will put $10,000 worth of equipment in the back of a pickup to drive 100 miles to pan for gold and come home with $15 worth of gold. So, it is absolutely for the enjoyment of it. Can it be profitable? Absolutely. You need to know where you're going. You need to, establish a claim, legally. And if you mine a claim and you do it profitably, you can earn quite a bit of money. You watch Gold Rush, the TV show. I mean, Parker Schnabel just purchased the Dominion claim up there, and in his first year made $15 million. Basically paid the price of the claim. And he's got 10 years worth of land to dig from there on out. So, you can start with a very small claim and build over time. I have a lot of techniques that I can help our viewers with as far as finding places to dig. Joining your local club, prospecting club or metal detecting club, is the easiest way to get access to a large amount of claims to go and prospect on.
Hey, Ben, let's take a step back for a moment, if we could,
Sure.
From an investment standpoint. And it has to do with the kind of the school of thought that you're sharing with us about the benefits of using gold as part of the portfolio. So
Sure.
Can you talk a little bit about where you've had success, either yourself or with clients, with regards to how much of an allocation? Well, first of all, why do that? I think keeping it really simple. And then how much of an allocation do you recommend clients consider? And those that aren't adventurous enough to go, lay a stake in the ground and do prospecting, there's certainly other ways to buy gold and invest in gold.
Absolutely. So how did I get started? Well, I had what I call stock market anxiety. I'd been watching my portfolio for a number of years, not really knowing what to do with it, but just watching the numbers fluctuate. When I retired myself from corporate America and stopped contributing to a 401k, I started worrying about a pullback. And so what I did was I cashed in my 401k and moved it into a gold-backed IRA. And I will warn our viewers, you need to be careful and you need to check trusted sources when doing this. But I did. I moved my 401k, liquidated it, and moved it over into gold and silver. At the time when I did it, it was a good time. I did very well. And today it's sitting in a safe place for me. Allocation wise, everybody has to do what they feels right for them. With the global market where it's at today and the activities happening not only with the banks, but other countries. I mean, we can all see it in the news. Gold and silver is being purchased far greater quantities than it ever has in the past. But there's different ways to invest in gold. That's one of the things that I help with the clients is understanding, gold bullion, when we talk about that, is the pure metal. And there's that pure metal takes on many different shapes. It could be just bars or rounds. It can be coins of a sovereign nation, meaning that there's an actual dollar value printed on the gold or silver coins. And then there's collectibles. and so there's all different ways of investing in gold and silver. And, we talk about, the reasons why people do it. It could be to protect a portfolio. It could be to get your money out of the banking system. It could be because you want to personally hold it, or you want to put it in a safe place. You want to, have it available to will to future generations, kind of leaving a legacy for them. So there's a lot of things to consider, and a person really needs to do what's in their best interest, given the situation that they're working with.
So Ben, when you say you have a gold-backed IRA, what does that IRA actually invest into, and how, is it
So it's
market every
actually
day,
it's a self-directed IRA. It's actually invested in physical gold and silver.
Mhm.
I chose the type of gold. I chose the year. So I mean, it was type 1 gold eagles and type 1 silver eagles of a particular year. And the reason I picked that year was because they only printed those coins for 6 months, and then they changed the dies. So I have a prediction that those coins could be more valuable than other coins where they went on a full year print run with the dies. So the year 2021, I believe, was the year that they changed the dies from type 1 to type 2 silver and gold eagles. So both types have a rarity compared to other years that those coins were printed.
Did you pay a premium to buy those? And if so, I guess what you're counting on is that premium to increase, whether gold
Correct.
goes up or down.
So gold and silver is up from where it was when I bought it. So I've already made my money back on the premiums. That's not a worry there. But yeah, there are terms that everybody needs to understand what a premium is. So let's go back to the beginning on the terms. It's like spot price. Everybody's aware of that, can look it up on the internet any day of the week. But the spot price is the money that prospectors are paid to pull the metal out of the ground. From there, you've got to go to the smelter. It's got to be minted at the mint. It could be graded at the NGC, the grading company. Then you got dealers and distributors, and all of those little extra costs from digging it out of the ground to putting it in your hand. Those services that are being offered are what equals the premium that you pay on those coins. So the closer you get it to a nugget, or gold dust, a nugget, things like that, the less premium you're going to pay, because it hasn't been refined, it hasn't been minted, and you haven't had to pay a distributor to get access to it. So spot price is what somebody would have to pay me if I went out and dug it out of the ground and then handed them the gold.
Right. How about liquidity? How do you address liquidity if somebody needs money from an investment in gold? I'm sure there's a lot of misunderstanding surrounding that.
Sure. I've actually done it. I had my 401k in the gold and silver. I needed to pull some money out, and all I had to do was call up, work with the depository that is holding my gold. They actually buy it from me, and they just sent me they wired the money to my bank. The process took about 7 days. So it can be sitting there in gold and silver, enjoying the price increases. And when you need it, you're only 7 days away from getting a wire transfer to put it back into your wallet. And there are other programs where you can buy gold and silver, for as little as $1. You could be putting $5, $10, $20 a week away into gold or silver, and you could liquidate it just as easily and have it transferred to your bank. So I know we're getting close to time, and there's just one more thing I wanted to mention. The wealthy families of our country, have been investing in 5 major assets, over time. And that is, exclusive real estate, fine art, rare coins, gold, and other usable precious metals like silver, copper, things like that. Well, I wanted your viewers to see when we talk about fine art in the metals industry, we're talking about coins that are made of silver but come in shapes to where you can get fine art. You can get gold and silver eagles, and you can get just silver rounds where it's a 10-ounce piece of silver, but it's just in a bullion round. And then the other things that we have that people need to be aware of is collectibles. And collectibles are very nice coins that are graded and protected so that you can collect gold and silver, and you can have a lot of fun doing it, so that your money can do something more than just sit there and earn income. It can actually be an enjoyment or a hobby and something that you can leave to future generations as a legacy.
So, Ben, before you tell us your address, what do you do to protect that? Because obviously you want to make sure you've taken the right steps.
Well, there are a number of ways that you can protect your assets. One, you can keep it in a depository.
Right.
You can find a private vault that will store it for you. You can have it in a local vault, a local safe, or you can play Mother Goose and you can just sit on it and protect it yourself.
Right.
So there's many ways to do it, and getting in touch with me, I can help explain all the details of that, and I'd be more than happy to have those conversations.
Yeah.
I have a question on that then, Ben. What is the process for someone to contact you, and what is it you provide them, and at what cost as far as guidance or advice?
Just for simplicity for the show, just go to benrusk.com. You can get a hold of me there. As far as, helping people out, there's a number of different avenues we can take. I don't know that we really want to discuss, dollars on the show here. But I'm more than happy to explain the processes to anybody for free. And then if you choose one of the options, the prices for each option are different. And, we help people get in where they fit in. Like I said, as I can say that for as little as $149, you could have access to a platform where you can buy gold and silver 24 hours a day for as little as $1 per transaction. And then you would get $1 worth of gold and $1 worth of silver, and you'd be able to store it in a private military grade vault, protect it under your name.
Ben, you hit it on the head a moment ago. We have wound down our time, and I don't know about Mike, but a bunch of other questions came to mind. We could certainly keep it going if our streaming service allowed for that. But thank you for your insights and sharing your experience, certainly with a smile on your face. That means you're enjoying the second half of a new career, or another half of a new career.
Absolutely.
And thank you to our audience for listening in. Our next guest is Steve Check, who's the CEO of Check Capital Management, which is a registered investment advisory firm out of Costa Mesa, California. And until then, have a great day, have a great week. And those of us here always want you to know that your money matters.